How's it going, guys? Stas here. Welcome back to another video. So check it out. We have to break down Tesla stock in this one, even though the stock market's closed. It's Good Friday. Happy Good Friday, guys. And we have Easter on Sunday. Happy Easter to everybody out there. So yeah, the market's closed right now, but I figured, hey, let me make a video going over Tesla. We'll break down the charts, go over the analysts, what they're saying, and we'll break down the earnings estimates, revenue estimates, everything that you need to know as we're now 4 days away from Tesla's earnings. So guys, hit the like button. Do not forget to subscribe. Follow along for more content. And with that being said, cheers. I appreciate you all for tuning in, and let's dive into it. So Tesla stock yesterday didn't have a great day or a bad day for that matter. We were pretty much flat across the board all day on the stock. We went down 18 cents to give you some perspective here at close. 18 cents, 0.07% in the red. So yeah, pretty much a flat day for Tesla, and that is not how it has been. I mean, we all know Tesla has been downtrending. We got all the way down to 208 about 10 days ago, earlier in April. We got hit from 290 all the way down to 208, and then we saw a bit of a spike. When we got the 90-day tariff pause, the stock got back to about 270, 275, and it's been slowly trickling down since that point, right? As the entire stock market, for the most part, has as well. And on the 4-hour time frame here, guys, it's pretty obvious that Tesla is still in an overall downtrend, and we have a descending triangle. Do you guys see this? We have lower highs being made clearly ever since at this point the middle of December. So for a good 4 months now, we've been making lower highs, and for a good month and a half, we've been holding support at about 210, 215, 220. So we're making these distinct lower highs into this 210, 215, 220 support, putting us in this descending triangle. And we're now under both moving averages. So really, essentially, what I'm trying to get at is the bulls are nowhere to be found. They're nowhere to be found. And we all know about what's going on with Tesla, Elon Musk, the brand destruction. You know, Dan Ives said, don't quote me on this exactly, but I'm pretty sure he said something like 10% of Tesla's future customers are now gone, essentially, because of the brand deterioration. Or maybe he said 10% of future potential Tesla customers that don't already own a Tesla, those customers are gone, which, I mean, they could come back. You never know. But that's what Dan Ives is saying. The company's seeing a lot of competition. There's a lot going on. The protests, this, that, the third, declining sales in a bunch of different regions. So Tesla is in some crap right now. Let's just say that. I don't want to say they're screwed long term. I don't think they are, but in the short term, you could say that maybe. They could be in trouble in the short term here, and I am not convinced at all that these numbers are going to be remotely good, And the thing is that priced into the stock now? Is the pain already priced in, or are these earnings going to be so bad where it's not priced in and then we start collapsing? I have a feeling they're not fully priced in. We'll see. I have a feeling we could see more downside on this stock. I don't know. Maybe that's just what I want to see. And we all know the stock market does not do what you want it to do, especially individual stocks. So we don't know for sure, but at this point, we're heading into earnings in 4 days. Let me give you a date here on the 22nd. So what is that? That's on Tuesday, I believe. Either way, we're heading into earnings. Very bearish, right? The sentiment when it comes to Tesla is very bearish. And the million-dollar question is, will these earnings be good enough to push it up maybe? Or will they be so bad to the point where it just collapses under 200? And you guys know, I've said it before, I'm looking to buy Tesla at some point. Not yet, but if it gets under 200, I will strongly consider it. Ideally, in the 175 range, I would be all over this stock, 150, 175. But I don't know if we're going to get there. I don't know if we're going to get there. And let me know what you think in the comments down below. I'm curious as always. And let me now pull up this page here from Yahoo Finance. We'll go over some numbers, kind of what you need to know heading into earnings, which again are now in 4 days. They're coming up, guys. They're coming up. So the market cap for Tesla right now is $776 billion. So long gone are the $1 trillion plus days. Well, I guess they're not too long gone. It wasn't too long ago. But now we're at 775 billion roughly. Price to earnings ratio is on 117, which honestly, if we're looking just at the PE, that's pretty high considering they're barely growing anymore. They're down. They're actually declining revenue-wise in a lot of these different regions, at least for now. So I think a PE of 117 is pretty high, and the beta is 2.58. That's one of the highest betas I've seen in a while, and that just pretty much tells us this stock is way more volatile than the overall market. We all know that. The market is at a 1 beta. To keep it simple, the beta for the market is 1, right, as a whole, to keep it simple, and it's at 2.58, Tesla. Anything over a 1 means it's more volatile than the overall stock market. Anything under a 1, it's less volatile. So think of stocks like, Philip Morris or something like that, or Altria. I'm pretty sure those two have a beta of under 1. There's a lot that have a beta of under 1, but those two come to mind right off the bat. And Tesla's on the other side of the spectrum, right? And looking at a little bit more about these different ratios, looking at these ratios, again, the market cap is 776. Trailing P is 118. We covered that, but the forward is an 89. So forward PE is coming down, which is good. That's good, but still pretty high in my opinion for a company that's not really growing right now. To give you perspective, Nvidia's forward PE is like a 20 right now, and their trailing's in the low mid 30s, or at least it was last I checked. And that company, Nvidia, is growing like crazy. So think about that. Tesla's PE is like 3-4 times what Nvidia's is, which is nuts, right? And the price to sales on Tesla is 8.6. That's come down, but arguably a bit too high. Price to books 10, maybe too high there as well. And when it comes to the different analysts, let me show you guys this. Although we don't obviously just invest based on analysts, we take what they say with a grain of salt. It's still worth looking at. So based on 48 analysts here on Yahoo Finance, on Wall Street, I guess, 7 of them have Tesla as a strong buy right now. 16 have it as a buy. 14 as a hold. 9 have it at an underperform rating. And it looks like 1 or 2 have it as a sell right now. So for the majority of these analysts, it's either a hold or a buy, which I tend to agree with, right? I'm not buying it here. So I would say I'm more on the hold side, even though I don't own it. So I can't hold it. But if I did own the stock right now, I would just be holding on. And if it gets down, again, under 200 for me, that's when it starts to get in that buy range. If it gets to 150, then it might be a strong buy. That's where I would put it. For the long term, obviously there's still a lot that Elon has to jump through, a lot of hoops he has to get through in the short term. He kind of screwed himself over a little bit with Tesla, with Doge, getting into politics. But I think long term, this too shall pass for Tesla. And it looks like here, based on analysts, the price targets, we have 515 being the high on Wall Street, 120 is the low, the average is 311, you guys can see right there, and the current price is 241. So we're more towards the lower end of what analysts are saying on Wall Street. And for earnings, let me show you guys this real quick. earnings based on 28 analysts. The average EPS estimate is 42 cents. Let's see, the low is 20 cents. Oh, wow. The high is 70 cents, and a year ago they did 45 cents. So if it comes in at that 42-cent average, it's going to be less than what they did last year in the same quarter for earnings per share. Not ideal. And coming down here for revenue, we can see based on 27 analysts, the average estimate is $21.5 billion. The low estimate's 18.6. Man, that'd be terrible if they did 18.6. And the high is 27 billion. There's no way they're doing $27 billion of revenue. I'd be shocked, to be honest. But who knows? You never know. I doubt it, though. And a year ago, they did $21.3 billion. That's sales growth of over 1%. Nothing. It's really nothing for Tesla, considering what they used to grow at. A couple of years ago, the growth is pretty much non-existent now. And who knows? Maybe in a couple of years, growth will reaccelerate. A lot of investors are banking on that with full self-driving, the robots, robo-taxis, blah, blah, blah. We'll see how that goes. But it's not growing now, right? That's the point. In the future, it might reaccelerate, but it's not growing right now. And that is, one of the reasons, amongst a bunch of others, why the stock has been coming down. So, like I said, I am not a Tesla hater by any means, and I'm not one of these Tesla perma-bulls either, by any means. Trust me, I'm not one of these Elon Musk glazers out there that love everything that Elon Musk does. I'm very critical of Elon Musk. You guys know that. I've been very critical for a while, not just recently. For a while, I've been critical of this guy, and I think he's a brilliant guy, no doubt. No doubt, he's done very great things for Tesla, but I think right now in the short term, he's screwing up a lot of things for Tesla. And long term, I think it'll rebound. It'll bounce back. The brand will get back to what it used to be. I think we will get FSD at some point. We will get robo-taxis. The question is when. And in the meantime, we're going to see some suffering, some pain in the stock. We already have seen it. I think it's going to get worse, but the bounce back will be legit. I think it'll be pretty sweet in due time, in a couple of years. But for now, get ready for some pain. And like I said, I am not buying this thing unless it gets under 200. And guess what? If it doesn't get under 200, I don't care. I just won't buy it. It is what it is, right? It is what it is. So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Do not forget to subscribe, follow along for more content, and join the free email stock newsletter. I send out my top stocks every single week in a newsletter format. That is linked down below. Put your first name and your email address, and boom, you guys are in there. And with that being said, cheers. I'll catch you in the next video.